Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steve Sosnick, chief strategist over Interactive Brokers. We're going to discuss why QQQ, the Nasdaq 100 ETF, is a better trade than SPY when you're thinking about trending markets. Steve, it's great to see you as always. Welcome back to Trade Talks.
Hi, Jill. Always great to see you too.
And let's talk about some of your work behind this when you're saying that in trending markets, sometimes QQQ may be the better trade.
Yeah, the reason for this is it's something I put out on our website, Traders Insight, recently, and that is QQQ and SPY, and I'll just use them interchangeably because they're more tradable than NDX and SPX. But the two indices they correlate incredibly well. Depending on how you want to look at it, I've looked at you can do correlation many different ways. It almost always comes out to an R squared of greater than 90.9, which is very high, which means you're getting all the movement of one. They move together very, very well. And that's by design, I guess. At this point, the top stocks in Nasdaq are the top stocks in SPX. That's just the way it works out. And so what we found is they move together quite well, except QQQ does it with more volatility. If you want to think of it in those terms, the beta is higher. And so if you have high conviction in a move, you want something that's going to move faster. And in this case, QQQ tends to move faster than SPY or Nasdaq. NDX moves faster than SPX. This is over time. This is when you're trying to catch a trend. The other reason for this, of course, is SPX contains first of all, it's broader. That's partly one, 500 versus 100. But SPX also contains defensive sectors that are just by definition not a part of NDX. NDX excludes financials explicitly and really has no weighting in energy, just because of the characteristics of where these stocks tend to list. So if you're trying to be aggressive and catch a move that's moving, QQQ does that for you. You get the move and you get it bigger. If you want something a bit more defensive, then maybe you want to think in the opposite direction.
And Steve, let's talk about volatility for a moment, because we're in the second day of September, which is historically the most volatile month for trading in the markets. Anything that you're seeing from the Nasdaq 100 Volatility Index in VolQ or as it relates to VIXN?
Yeah, well, first of all, the major volatility indexes, for the most part, have given back almost everything they gained since prior to Jerome Powell's speech last week. It was only a week ago, just about a week ago at this time that the speech happened, and we went in with a little bit of nervousness, and in the past, over the past week so far, Monday through Thursday, we saw all the volatility indexes trading significantly higher. And yet today, as we get a bit of a relief rally, they've given back the vast majority of those gains. When I look at VolQ versus VXN, which is something I've discussed with you several times, we see that spread has been narrowing quite a bit, and it's not back at its lows. We've actually had a couple of times where the spread's inverted, but when I see VIXN trading at a very narrow premium to VolQ, it tells me that there's really not a lot of attention being paid to the so-called wings. Out of the money calls tend to trade at implied volatilities below at money calls, but out of the money puts tend to trade at higher volatility than at money puts or calls. And so what we're seeing is there's almost like you're almost able to, using VolQ when you see these, VIXN at a very low premium. VolQ in many ways to me is a better buy because you're getting the wings essentially for free, especially when they invert. There have been very fleeting opportunities where you could buy VolQ for less than you could buy VXN, which based on the construction of the indices, VolQ is almost purely at money options. VIXN has all the extraneous wings. To me, if you're looking for from a hedging point of view or even a speculative point of view, if you can get the wings, if you can get the wings essentially for free, let's buy the at monies and go from there.
All right, Steve, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks, Jill.